Hey, Sam, let's talk about what is a credit score, right? And then what are some factors that these credit bureaus look at to establish the credit scores? Right?
Yeah, absolutely. So a credit score, all it is a 3-digit number that represents your likelihood of paying something back to who you owe.
That's simple.
That's all it is. There's a lot of math behind it, but when you break it down
that's the
to the bare
meat.
bones, it is just, like you said, your resume to the bank,
Correct.
represented as a number.
Yep.
So let's dig into the 5 factors that make up your score. Starting
Absolutely.
with the biggest factor, 35% of your score, they look at your payment history. So pretty self-explanatory, right?
Yep.
Are you paying the
Do I pay
people
my
you
debt
owe
back,
on
right?
time?
Yep. And how much am I paying of that debt, right? That flows into number 2, which when you look at the top 2, right? Payment history and then credit utilization, that makes up, 65% of your score.
Yeah.
That's huge. And so when you flow into like utilization, because you're looking at credit history and then utilization is how much am I using, right? So if I got a $1,000 credit card and I get a $1,000 credit limit on that credit card, right? Do I take that credit limit and go out and buy a brand new iPad at $1,000 and run it all the way up day one? Or do I take that credit card and go buy gas and groceries and spend a couple $100s and pay that off? Option 1 of running that credit limit up really high and leaving it there, that's going to hurt your credit scores. Now, if I go have a $1,000 limit and I use $200 or $300 of that without the month and I pay it off, that's going to really help your credit score. So credit utilization is vital, how much you use and when you use it.
It's huge. So, it's funny. Someone can have $5,000 of credit card debt and have 2 completely different credit scores.
Absolutely.
All depends on credit utilization.
Mm-hmm.
If you've got one credit card at a $5,000 limit, you will get crushed credit score wise compared to somebody if they've got 2 credit cards, both at $10,000 limits, and they've got $2,500 on each. That's fine.
That's great.
You're below
Correct.
the 30% that they really look at.
Yep.
And so credit utilization is vitally important, and it's a little tougher to really wrap your head around and get, rather than payment history, which is obvious, pay your bills.
Pay your debt back. But you can make minimum payments all day long on a $1,000 credit limit that's sitting at $990, and you're making that minimum payment, and you're wondering, hey, why is my credit score so low? Because you've taken that credit limit, ran it all the way up, and left it there. So what Sam said, he kind of touched on that 30% limit, right? When you get a credit card and you max it out, or you go $1,000 limit, you put $500, $600, $700 on there, and you hold it there, and you don't pay it down below that 50% balance, it's going to negatively affect your credit.
Yeah.
Long term, it will negatively affect your credit.
But here's the beauty of it. That can change very quickly.
Quickly, correct.
Compared to missing payments.
Woof,
and
don't do that.
You start rolling down the hill of bad.
Correct, yeah. That'll really mess you up. Don't miss those payments. Whatever you do, make them minimum pay.
Yes, definitely. So that makes up 65%. Now we're touching on the 3 remaining things, a little bit less, but obviously important things to consider. 15% of your score is made up of the length of credit history here.
Yep.
This one, to me, as a younger person, younger consumer, it's a little unfair. It's BS.
Agreed.
To me, the only thing that matters really is, hey, do I pay people back, and am I not taking too much of that out? But
and that's why most of that's weighed there, right? But when you look at it, he's right. Like when you're young and you wonder why my scores will only go so high, it's because don't have enough room on your credit.
It's physically impossible.
Correct. You can't fast forward 20 years and have 20 years of good credit. You just got to kind of go through the process.
But that just points to the importance of establishing credit as young as possible.
Absolutely it is.
And
something I wish I knew earlier in life.
And the easiest way to do that is just throwing somebody you want to establish credit on, or having yourself put on somebody who's got established credit as an authorized user on one of their credit cards.
And we're going to go into a separate video really on like, hey, how can I, if I need to get 20 points on my credit, or I need to rebound it a little bit, what are some things we can do to do that? We're going to do a separate video and really drop some knowledge on, hey, how can I get some quick jump start to my credit scores, right?
Absolutely. So somewhat, self-explanatory there, but credit mix This next one is not so much self-explanatory
No,
at
it's not.
10%. Talk to us a little bit about what credit mix entails.
Right? So they want to see when the credit bureaus are evaluating your credit scores, right? They want to see, hey, I've got a credit card. That's your main weight, right? Hey, I've got a credit card and I'm using it and I'm paying my money back. Auto loans, mortgages. So like you'll see somebody who's got, younger like you are, that doesn't, maybe I don't have a mortgage yet, right? Your credit scores will hit a ceiling where they can't really push through until you get a good mix in credit, car loan, credit card, mortgage, right? Once you get the perfect mix is 2 credit cards, a mortgage, and an auto loan. You'll hit 800 credit if you utilize that system wisely. But the mix is hard because it's like, well, I've got a credit card, I'm young, I'm using it. And that's going to be the main meat. That's what you want. That's what the credit bureaus want to see is credit cards, right? Because that's the easiest thing to get and easiest thing for you to use recklessly or wisely. But throwing an auto loan in there, making sure we're making those payments timely, that's another good debt to have. That's going to help establish credit scores. And then once you throw a mortgage on there, of course, it really solidifies your credit scores.
Yeah. So what you're telling me is this is just a game, really?
1,000% a game. Everybody's so scared of it. It is a game. And once you learn to play it, it's a pretty easy game to play.
Yeah. Last but not least, new credit inquiries at 10%.
Yep.
This is...
Don't go have your credit pulled all the time.
Yeah. as mortgage lenders and people who obviously deal with credit every day.
Yeah.
It's funny because this is probably what we get questions on the most.
All the time.
Because there's some misconceptions.
I don't want to hard pull on credit. I don't want to do this, which I get. I don't like hard pulls on my credit. But
there's a happy medium there.
1,000%.
Right, I've seen. And it's not that you can never have your credit pulled because how else do you establish it? Like, why else would you use it? I think it's more so, hey, make sure I'm not buying a car, trying to take out a credit card, buy a house all at the same time with multiple people.
I think it comes down to time.
Don't use it
right. Like, hey, if I know I'm going to buy a house in 2025, right, and I'm going to really focus that search in summer of 2025. Don't go buy a car in May and then add 2 new credit cards in June and then have your credit pulled in July and August. It's going to negatively impact, right? Be conscious of any big purchase you have coming down and try not to have hard credit pulls leading up to that hard pull for whatever you're going to finance, a car, a mortgage, a new credit card. Really just be mindful of not having reckless hard credit pulls, right? It really boils down to that.
Yeah.
Know when you want to have it pulled and when you know you're going to buy something big and important, don't have credit pulls.
Yeah, exactly. Don't have to stress it for each purchase, just space them out.
Correct. You got it.
Awesome. So now that we've looked at that, let's take a look at some ranges of credit scores to give you an idea and then how you can check your own credit score.
Yeah, love it.
So kind of taking a look, and granted, these are some broader ranges, right? These scores vary a little bit by where you go in terms of ranges, but generally looking at 750 and above, that's going to be your A+ credit.
Correct. Yep.
750 is honestly where I've seen a lot of like first-time buyers, mid to early 20s. That's just where your score maxes out.
Remember we talked about that ceiling, right? Like
exactly.
If we don't have a mortgage on there and we don't have a ton of credit history, you're going to hit a ceiling, and that's kind of that 750 mark for this younger generation that didn't have a ton of credit established.
If you can't reach that 800, don't worry. You're not doing anything wrong.
You'll get there.
You're just incapable right now.
Correct. I get it. Keep doing the things you're doing, paying your debt back, and making wise financial decisions. Excuse me.
And looking at 700 to 750. That's good. And then once we dip below 700, that's when things start to get a touch tighter when it comes to banks lending to you, some different loan programs.
Maybe take a higher interest rate,
but you can still get financing.
1,000%.
It just starts to squeeze you a little bit from 650 to 700. And then from that 600 to 650 range, that's what we consider more poor.
Yeah.
There's still options available to you, just more limited, some less advantageous terms, but there's still options available. Below 600, what we consider to be the very poor range, you need to work with us. We'll take a look at everything. It's not where you've got to be forever. You're just going to find it tough to get a loan at this current point in time.
Listen, and if you fall into that range, don't feel. We talked about it, school of hard knocks. Most people learn this the hard way, and so if you fall into that range, reach out. Let us take a peek at it. We can give you some tips and strategies on how to get those scores up. Right, a lot of it is just knowledge, understanding how do I work the credit game.
Yeah, absolutely, and kind of some final thoughts and kind of wrapping this up. Take a look at your credit score. If you haven't in a while, if you do every month, good. Keep at it. Check it as much as you can.
Absolutely.
To really figure out where that pain point might be for you. You know, you might think, hey, I pay everything on time. Why is my credit score a 700? Look at your utilization. Mm-hmm. You can really self-diagnose where you're at, but you've got to be conscious of where you're at first.
1,000%.
So the easiest way to do that, Experian, Credit Karma,
all those are monitoring your credit, your consumer credit scores, which is great. It's different than mortgage pools, but it is a great way to keep track of where those scores are. And you'll see them jump or you'll see them go down based on what you're doing with your credit. Again, it is a game. And once you figure it out, you can really get to top tier credit. If there's specific questions or scenarios you want to run by us, we're non-threat. We want to help. At the end of the day, this is a game that we learned. We've worked really hard to understand the game. And so if there's anything we can help with, don't hesitate reaching out.
Yeah. We want to help and we want to stress the importance of a credit score. Just like you're saving money every month, check your credit score every month and you've got to know this game. And so if you want to see more videos, and we'll be making videos coming up on different mortgage loan programs, where credit scores fall there, some tips to increase your credit score, how to break that ceiling that we were talking about.
All that good stuff.
Drop a like, subscribe.
Please.
And if you want personal recommendations, and we know it's personal information, right, when we're talking about credit, shoot us an email, give us a call, and we'd love to help you kind of take that next step.
Thanks so much.